Hello, everyone. This is Stephen Richardson. We're continuing our study of the semiconductor materials and equipment industry. Previously, we looked at ASML. Today, we're looking at applied materials, AMAT. I'll just call it AMAT from now on. I might call it applied materials. Um, just so you know, I've got two other channels: Backyard Musings, which is current events with edgy commentary, and Law School Dash Essentials, which is outlining CalBAR previous questions in previous years so that law students can get an idea for their law exams or bar exams. And it's not necessarily CalBAR, it's any bar. They're pretty much the same. Okay, here we go. Here's the disclaimer. This is not financial advice. This is education purposes. So please do your own research when if you're thinking about buying a stock. I'm teaching you how to do the research. Okay, the sales projection. As you can see, I snipped my Excel spreadsheet where I gather all the data together. And here's the websites where I get all of the data. Right here, Zacks, Value Line, Yahoo Finance, Better Investing, and 10-year growth, 5-year growth, recent quarter, trailing 12 months. So I put all that into a convenient, and then I make my decision. I'm leaning towards the value line, but want to be a little bit more aggressive. So my decision was 4.5%. So I dialed in 4.5%, and you can see where it landed on the sales. Okay, let's move on to and this trailing 4 quarters you can get from the quarterly tab. The quarterly tab, and I snipped this recent quarterly figures right from the front tab. Oh, same with this graph here too. Okay, earnings per share projection. Here's the website that I snipped. I went to all of these websites: Better Investing, uh, Seeking Alpha, Nasdaq, Yahoo Finance, Zacks, Value Line, Better Investing. And so I put the yellow is I put the numbers in from those websites. The green are calculations that because those websites don't give you a percentage, they give you how much the projected average earnings per share that the analysts have, and then you've got to go back and add up all the quarterly previous earnings per share to do this calculation. So, and my guess, my judgment or guess, if you want to call it, was 9% for the earnings. It's more than twice what Value Line is projecting. I think Value Line's kind of being a little bit meager. Um, so I bumped it up a little bit, kind of aggressive. Again, the trailing 4 quarters is from that quarterly tab, right? You can find this data. I've circled it. Pretty easy. Once you gather all this data together, it gets really easy to make these judgments. Okay, so here's a recap of the projections. So 4.5% and 9% for EPS, 4.5 for sales, and it calculates out what the revenue should be in 5 years, what you project it to be, and the um, earnings per share should be for 5 years out. And then I've shown you the evaluate the management, the pre-tax profit, return on equity, and debt to capital. Okay, moving on to price earnings at a glance, the PE ratio. This is a snip, and I don't see any outliers for high or for low. It does have a dividend, but you can see the dividend is very meager. But I guess it's kind of in line, but it's kind of low with their earnings per share. Maybe they're using the money for something else, research and development or investment. So there's no outliers, so I'm not going to take any out of the equation. Current PE 21.1, earnings trailing 12 months $8.11. The high price between 2019 2023. That's if you were in on that. If you bought it in 2019, you've done really well. Again, it has a low dividend, but it's increasing year over year, so that's good. Okay, so price earnings data, just like where the sector average and below, is basically the same from ASML, these the S&P and the industry and the sector. Value line, I pull that from the value line. The peg is 2 times the um, or it's price earnings divided by EPS growth, your projection, and that gives you the peg. So it's overvalued. This stock is overvalued. So now we need to figure out what we're going to put in for high and low. You can see here's the price chart for the last 5 years. It's gone up, roller coastered, and then gone back up. So does it have the potential to keep going up? Yes, it does. Okay. Now we're trying to calculate the high PE. And you can see that when you click open the window on the green for the high PE, the green little outline window, this pops up. So I've highlighted what the 5 year average high, the 5 year average, and the current PE, and plus all the data that you collected sector and S&P. So you have an idea. I chose 22. Um, they had a hard time in 2023. This might need some research. AMAT has consistent PE ratios, so I kept it to near the current. I was very conservative, and you can see down here the averages for their competitors. Okay, the low projection. So I projected a low of 11. Uh, you can see here the 5 year average low, the 5 year average, and the current P. Those are the same. This is for the low, and so I kept it similar, but increased it maybe a little bit aggressive for the low because I was higher on the high EPS. So um, let me see, is on the low P is on par with its competitors, except for ASML. It was a lot higher. Then you click update study. Here's the competitors. Okay, so a recap of the PE projections 22 and 11. All the data is the same. I added 22 and 11. I snipped the zoning. So the buy zone you can see here, the sell zone you can see here. It's currently in the hold zone. Um, can AMAT go applied materials go to 274 per share? That's what I'm projecting. I think they could, given some time. Remember, we're on a 5 year horizon. They might do it sooner than 5 years. There was a stock split. There's been plenty of stock splits. Most recent was in 2000, so long time ago. All right. So again, the 5 year potential for applied materials um, says it's in the hold with a 1.3 to 1 upside downside. That's why it's in the hold. And it's calculating the dividends into its calculations. Uh, CFRA, the stars report shows a buy 4 stars. Fair market value was 152. It's now priced at 171, so it's a 10% premium. Morningstar has it at 3 stars, and this is what it looks like with the 33, 33, and 33 for the buy, hold, and sell. Okay, here's the dividends. Like I said, they're pretty meager, but it grows year over year. Payouts are 18.5%. That's about half of ASML. It's also trended downward, averaging 33.1%, which would disqualify it, but its current debt to capital is 26.8, most recent. ROE looks pretty good. They've got a stock buyback program. Very disappointing dividend. So that's a look at applied materials. I'm Stephen Richardson. If you liked what you saw, click subscribe, tell your family, tell your friends, and tell your enemies. Have them subscribe too. I have two other channels: Backyard Musings, Current Events and Edgy Commentary, and Law School Dash Essentials for law students wanting to pass their exams and bar exams. Thanks and have a great day.